The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the February 11th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs. My second favorite out there, because my favorite is become your own electrician. My second favorite is change your mind and change your life. Why? Because, you and we've got a giant capacity, folks, to when we focus our resources on any one single area of our life, oftentimes we overestimate what it is that we can accomplish in the period of a year. But what we also do is we underestimate what it is that we can accomplish in a decade out there. Now, it's important to understand because sometimes, you get to a point where you've been working so hard at something and you're confused, it's just not working, and never give up. Never, ever give up. Now, a lot of folks out there that just simply don't achieve what it is that they truly want. And the reason is because they just simply never direct their focus. They never concentrate their power. It's as if they are just simply dabbling their way through life, never deciding to master anything in particular. I think you should master the area of trading. The reason why I think you should master is because it correlates to so much that is also going on inside your life. Folks, success comes from taking initiative. No question about that. It also comes from being persistent, from making sure that you express the depth of your conviction on a continuous and ongoing basis, and do it with every action that you take. And so the question I have for you is, what simple action could you take right now, right here today, right this moment, to produce a new momentum towards some success in your life? Maybe there's something you're not feeling good about. What simple action could you take to change that around? Folks, this is what I know to be true. The path to success is to take massive, determined action. Don't take a small step. Take some big action out there. Put yourself out, because there is no abiding success without commitment. If you want to be successful, it's pretty simple. Go find someone who's achieved the result that you're looking for. If you want to be a better cook, a better chef out there, go find someone who's good at it. Just simply copy what they do. Make sure you learn their recipes, because guess what? You'll achieve the same results. So the time is now to master anything it is that you want in life, folks. Mastery, it is a beautiful thing. Life is a mirror, and life just simply reflects back to us that which we think. That's why what you think is so important out there. My favorite expression about mirrors is turn your mirrors into windows. That means look in the mirror, see the person you want to become. I say become because we are always improving. It doesn't matter what level you're at. And then take some form of massive action, jump through that mirror, turn that mirror into a window. Let's go check out the mirrors and the windows of the market. Right now, we've got the Dow trading out at 15,856, up 54 points. The S&P up 5 points, trading out at 1804. Composite up 12, trading out at 4160. Russell 2000 joining in on the fray out here, up $2.60, trading out at 1121. Apple's up $3.35. Microsoft up 28 cents. That's a nice 0.75% out there. Intel up 0.5%, up 12 pennies. Leading the charge, the upside is Demandware. Demandware, not Demandware. There's a company called Demandware, so my apologies. Demandware, DWRE, up 13% here this morning. Green Mountain Coffee Roasters, it's percolating. It's up $4, up 4%. Ligand Pharmaceuticals, LGND out there, up 6.5%. Genesee and Wyoming, GWR, up 4%. CoMed Pharmaceuticals, OMED, up 12%. Man, it's nothing but pharma stocks out here to the upside. You've got SodaStream. That's not a pharma. We'll take a look at that SodaStream chart out there. It's up 7%, up $2.80. Infoblox, well, that's a whole different story. That's to the downside, off 16 points, down 47%. Rackspace Holding, that's off $6, almost $6, down 14%. Pioneer Natural Resources down nearly 3%. Qualsys down 18%, $5.50. WebMD struggling this morning, down 9% off $4. Proto Labs off $4. Sohu Communications down 3. Our call-in number, though, 877-927-6648. Let's pick up where we left off. If you didn't catch the opening hour out here, we're seeing some divergence. It's the kind of divergence that does say be careful out here. But it's a 120-minute chart that we're watching at. Inside the euro, Japanese yen now gave us a nice reversal signal. We're not seeing the follow-through that we want, but this chart here does not end until 11 o'clock. So we've got another 45 minutes. We'll be paying attention to it. We got a couple different patterns that we looked at on the 120-minute chart against the euro, Japanese yen that we are looking at. This thing formed a 0.786 Gartley sell pattern, did it? And it confirmed it with a little shooting star. That took place here at 9 o'clock in the morning. Now you've got the bulls making an attempt to make a run to take out that level out here. We'll see what they can do during the next 45 minutes out here. That was one pattern. You've got descending price channel that this thing ran into. What else do we have? Hey, on the 30-minute chart, we got a 3 drive to a top pattern out here. That 3 drive, if you take a look at it, the first drive out here taking place at 8 p.m. last evening. That was at a price high of 139.77. That's your first drive. Your second drive out here, that took place at 12:30 this morning. That was out at 139.92. You then had a move up into the time frame of 5:30 this morning. That made a high of 140.81. Little bearish engulfing candle out there, a little bit of follow through. We saw that area get tested here. That was during that 9 o'clock session, so you got your 3 drive out here. So if this market is going to start cratering, we're going to see this currency pair not give it up. Whether it gets tested is one thing, but we will see it not give it up. If it gives it up, then Steve-O's got to say, something to think about. So we've got some reversal patterns that we're seeing on a 120-minute chart, on a 30-minute chart. How about the daily chart out there? Well, the daily chart, what it's done, it's made the dead cat bounce. If you come off of the swing point high out here on December 27th, that level is 145.67 down to the low out here on February 4th. That's at 136.22. It's made the dead cat bounce, the 0.382 retracement. That number right around 139.83. You're trading at 139.87 right now. If, in fact, it turns down from here, that could turn out to be a very large A to B equals CD down. So that is on the euro, Japanese yen. Let's go take a look at the indexes. Let's go see what they are doing here as we speak. Let's take a look and start off with the S&P 500. The cash index so far getting up to a high today of 1806.45. 1807.70 would be the exact 0.618 retracement level. We'll take a look at the ETF structures as well. We'll see what they are trading into. Can it get higher than this? Well, if you close above 1807, if the euro, Japanese yen reversal patterns fail out here, then the answer to that question is yes. Of course, it can do it even without those things out there. And if it does, and the euro, Japanese yen begins to move lower, those are the kind of divergences that you really want to be paying attention to. But we'll take this one moment at a time out here. So it has the S&P here, not quite or close enough to making the 0.618 retracement. Again, 1807.70 is the exact number out there. Let's go take a look at the NDX 100. What's the NDX 100 doing? It's up at the 0.786 retracement. 35.98.72 would be, well, hold on a minute here. I don't think I had the right number there. In fact, I know I didn't have the right number. My apology. I don't know how that happened, but we can correct it post-haste. It's up above the 0.786 retracement. Excuse me. Of course, that's what Steve Martin would say. Right now, trading out at 35.95 out here. 35.88 was the 0.786 retracement. This says here, okay, which is the consolidating pattern that is out here inside of the NDX 100. And that's why, and I say consolidating because it was not able to break through and bust through that important December 18th swing point low, which was 35.10.52. It was tested, but tested on light volume. So being at this level here, 35.95, this now could make a run for the swing point high whether that's the 36.34 level, that's the actual high, or whether it's the 36.15 level, which is the January 22nd low out there. We will find out. But it is just slightly above the 0.786 retracement area. That's on your NDX 100. Let's take a look at the Dow. Let's take a look at its retracement efforts out here. Retracement of its last leg down. Its last leg down because I'm just simply using the January 21st swing point. But we'll use them both out here. We'll use December 31st. Let me just put the different color on that. We'll colorize it, not green. Let's make it blue or red or something. There we go, blue. So you can see right now you've got the Dow trading above the dead cat bounce level, the 0.382 level, which is 15,000, either 791 to 15,817. It's trading at 15,861. That says here that likely what it could do is it's traded up into that one-hit wonder, that one-day wonder from January 28th out there. That high is 15,945.89. A move above that level, close back below it, that would be considered a failure. Close above 15,945 and says from a price standpoint, it wants to make a move up to the 16,069 level. That's what's going on inside of the Dow. Let's take a look at the Russell 2000. Russell 2000 finally making the 0.382 retracement out here. That level 1120.66. You're trading at 1121.60 out here, so you got about $1 higher. This is the weak link at the moment inside of the markets out here. That is the IWM. As far as where can it actually move to if these markets move higher, if the NDX, if the composite tries to lift the tide higher, I would say that the Russell 2000 probably will struggle right at the 1130.75 level where we began that downdraft on February 3rd out here. That's what's going on inside of the Russell 2000. If we go switch over and take a look at the ETF structure out here, we'll do that by first kicking off with the Qs. We take a look at the Qs here. Yesterday, what did they do? They were moving up with volume of 30 million shares, going into the downdraft of 64 million shares out there. That's what it's dealing with and testing as we speak here right now, the top of which is 88.18. You're at 88.14. 64 million shares is what it's going into. We've been trading for 45 minutes. You've done 6.7 million shares inside of the Qs. Sometimes, even if I were to give it the benefit of the doubt of being able to maintain the same volumes all day long as it has during the first 45 minutes of trading, it still comes up light with regard to the downdraft candle. Of course, if in fact the Qs can get above 88.18, that sets up a move to $89 even Steven out there as it tries to take on that swing point here from January 22nd out here. That's what's going on inside the Qs. Let's go take a look at the IWM. As we take a look at the IWM from the high to the low, the high being the January 22nd swing point to the low here on February 5th. It has made just above the 0.382 retracement. 1113 is the number you're trading at. Did I say 11? 111.13 is the number. It's trading out at 111.36. Volume-wise right now, so far it's done 6.7 million shares, going against this downdraft of 91 million shares, even in a generous basis. It does not have the volume to take out that downdraft. It does say that the IWM could move up and test the 112.20 level. 877-927-6648. We'll be right back, folks.
Andy Heck's powerful weekly newsletter, the Techno-Mental Commodity Report, has delivered multiple triple-digit winning trades in recent months, and now's a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. When you sign up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. You'll be under no obligation to pay anything, and should you decide to continue, you'll lock in the low rate of only $59 a month. That's less than $2 a day. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 85. S&P is up 8. And let's go take a look at the currency pairs. I'm going to come back here first to the euro, Japanese yen, watching it like a hawk. Now, here's one of the cool things that we know about this pattern here. Number one, the pattern I'm referring to, well, there's really several patterns out here, but the one specifically I'm speaking about is the 0.786 Gartley sell pattern that is in place. If, in fact, this fails, and the failure here would be a close above 140.29, that's the level of the shooting star candle that took place. If this turns into a failure, this will likely turn into a butterfly pattern out here. Number one, it'll first go ahead and make its 100% move, get you back to the 141.23 level. But because we've got in essence, a confirmed Gartley sell pattern, if it fails, it'll not just make that move, and that'll put some fuel in the marketplace out here. It'll go ahead and turn into a butterfly. So we'll be watching this like a hawk. Speaking of hawks out there, well, actually, I don't even know where to go with that sentence. So let's go take a look at the euro-US dollar currency pair. Can't really make the transition there from a hawk to the euro US dollar. But if we do take a look at it, this is the weekly chart that we've been watching at on our screen. Boy, you talk about just traveling in a narrow banded range out here. We can see how the euro US dollar went ahead, moved up, ran right into the resistance line. That's the red dark line that you're watching, that you're looking at on my screen out here. That's the downtrend channel line all the way back from 2008. The euro is going to bust through this area here soon. It's getting towards the apex here, but this is a weekly chart. It can go a tad further. In fact, it can go really all the way into March or so. So it is run into resistance, at least some very significant resistance from a weekly standpoint. If we take a look at what else we have going on here in the currency world, well, we've got the Great British Pound. That's back in our crosshairs again. This is the currency pair that just won't give up. It wants to take out its resistance line. I mean, it is trying. That's the resistance line, taking us back to January of 2010, and it has attempted now for 1, 2, 3, 4, 5, 6, 7, really, the last 7, this is 8 weeks. It has tried now for the last 2 months to bust through this area, has not been able to do it, so it is building up some energy, and if it does take it out, it's going to be a large move for the Great British Pound US dollar, but right now, not so fast, just doing what it has done for the last month here, which is trying to take on that area. Let's take a look at the U.S. dollar, Japanese yen out here. It never did get down to make this 0.618 Gartley buy pattern. Well, let's take a look and see what it is doing out here. At this stage, looks almost more like it's still just making lower highs and lower lows out here. As far as retracements, we take a look at, let me just turn this tool on. Let's see if we can see some retracements there. No, not really much to take a look at there. So right now, just trading into the January 31st level. Let's take a look at a shorter-term chart, see if we can see any kind of pattern out here. This is the U.S. dollar, Japanese yen that we're looking at. So I've got the 30-minute chart on my screen here. Let's see if this gives us any kind of better picture, any kind of a better feel out here. Let me, got a number of patterns out here. So at this stage, looks like it's just making if I take this back, looks like just a little counter-trend rally out here. So we were seeing, what we did see on the daily chart was we did see those lower highs and lower lows out here. And the 30-minute chart now just showing that price is really traveling with inside this little subcorrection price, just creating this little subcorrection out here. And that is, let me take this back a bit. Yeah, this is a little downtrend channel going back all the way into the January 2nd time frame. So looks like it has a bit higher to go before it runs out of fuel into resistance right around the 102.76 type mark out there. That is on the U.S. dollar, Japanese yen. Had a request to take a look at Fossil. I believe they are out with earnings. I can't recall if it was after the bell today. Doesn't matter when it is. Let's go take a look at it. FOSL is the ticker symbol. It's trading right now 114.55 out here. Let's get see if we get a feel for what is going on inside this equity. Been really in a nice little consolidation out here. This thing had gapped up, and this was on the trading session of May 7th, 2013. 2.8 million shares. It came back and it tested that area and did with 666,000 shares. So that was a nice test of a breakout area. Went on to go ahead and complete the A to B equals CD pattern. That looks like this, and when I say this, I'm referring to using the swing point low on April 8th as your A point, your B point being the May 9th, and then the swing point was the test of the breakout on June 24th. Goes up, makes a 1 to 1.618, A to B equals CD, completes that pattern here on November the 5th. And since that time frame, this thing has been in a decided downtrend out here. We come back. We'll go take a look at Fossil. We'll take a look. Ooh, that looks pretty nasty out there. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 82 points right now, trading out at 15,883. S&P is up 7 points. Let's go back and take a look at the stock chart here for Fossil. Now, if you're following us on Tiger TV, the chart I've got up on my screen here, it's got the Rhodes Momentum Indicator signals out there. Momentum, that's really what it does. It helps us to understand the power and the momentum and changes in momentum inside of a market out here. You know, to me, it wasn't enough just to say, hey, it's making higher highs and higher lows. I really want to understand what the underlying strength was behind any kind of a move out there. In this case here, as we take a look at the monthly chart, now I've got the screen has different colors. Look, we're all visual. So if I can link the known to the unknown, even if you don't know anything about technical analysis or technical trading out here, I can tell you that red is like a stop sign out there, right? When you see the red zone, that is telling you that, no, you haven't made it towards the end zone and you're going to score. This is kind of a beware out here. Now, of course, it always depends on the time frame in which you're trading and what's going on above and below. But in this case here, with regard to fossil, where we're at right now, it is in that red zone out there. So that is flashing a warning sign. Yellow, as you take a look at yellow areas on my screen, is nothing more than be cautious out there. It says maybe make your stops a little bit tighter, come back, take a look at the trade, maybe do some reward to risk analysis, but just simply be paying attention to it. The dark blue areas on my screen out here, those are when an equity moves into a buy mode out here. And the light blue is when you're in a nice, super strong bullish mode out there. Now, you'll see some red boxes on my screen. You'll see some green boxes on my screen. That helps me to understand who is in charge and also a little bit more about the trend. And is it the buyers that are in charge or is it the sellers that are in charge? And that's important, and also with regard to the strength. Well, when we take a look at the weekly chart out here, first you got this huge wide-ranging bar, and that is from May 11, 2012. And all price did was move. That was a big, huge downdraft. All price did was come back into that level as it made a retracement. It did that, and it made that level back here the week of November 8th, 2013. Right now, on a weekly chart, the second green box that was formed here the week of January 31st out here, that's telling us that the sellers are actually in control. Now, last week, it did have a nice bullish candle out here. It's not being confirmed as we speak here right now. So you do have some support at last week's lows, that price being 106.91 out here. But nonetheless, it is in a sell mode on the weekly basis. On the daily chart, the daily chart really tells the picture of sellers in control out here. Look at this green box. And I'm coming back to November 21st out here. And ever since that point in time, we've only seen one little counter trend rally, only one red box that was formed out here, and that was on December 26th out there as the markets were, up and away. And so just simply sellers in control of fossil out here. Now, look, even though it's in this little blue area, yes, I did say that is a buy signal. Now, what you really need to understand is when you're taking a look at this, there's some other tools that I use, I share with subscribers. This really is saying counter trend rally, not buy. And there's a big, huge difference there when you take a look at any kind of an equity out here. This also has been working off its extreme sold condition out here. So at this stage, it's not like flipping a coin right now. If you were long fossil, and that's not to say that the market won't, as they come out with earnings, anything can happen. But I can tell you what this stock chart tells us is that the sellers have and are in control of this equity. And that was on fossil, FOSL. Is the ticker symbol. Let's actually go take a look at some of the, as long as we're over here, let's go do something that I have not done here for a while. Let's go take a look at the sectors within inside the S&P 500. No reason to not do that. All the sectors within inside the S&P 500 are green today. So let's start off. Let's take a look at the XLB. The XLB is the utilities sector out here. No, the building material sector. It's the XLU that is the utility sector. Now, inside the material sector, boy, you got a big, huge price relative strength divergence out here. You can see this right now today. It's making every effort. It's still in a counter trend rally mode out here as it is making its high. Now, this weighting with regard to the material sector, the XLB, it's pretty small. Let's see, in my newsletter, there's another spot that I think I cover it. Let me see if I can pop open this spreadsheet here. Yeah, the materials, 3% of the weighting structure. So even if this were to turn to be bullish, it's only 3% of the weighting structure. There's 31 stocks inside it, so not a big deal out there. Let's take a look at the utility sector, the XLU, kind of defensive structure out here. Let's go see what that is doing. So the utility sector here, the defensive mechanism inside the S&P 500, that has been in a nice little bullish mode ever since January 10th out here, 2014, continues to be inside that area. It's trying to take out some resistance out here That resistance is up at the level of about price of $39.45. It's trading at $39.23 right now. This, too, is about 3% weighting structure inside of the S&P 500. Let's increase the weight a little bit, the good kind of weight. Let's go take a look at the consumer staples area. This is the daily chart here. This is counter trend rally mode out here for the consumer staples. That represents 10% of the weighting structure inside of the S&P 500 out here. Let's take a look here. And this is on the daily charts right now. Let's take a look. Let me take a look at the weekly chart for the consumer discretionary area. Let's go see what that chart shows out here. On the weekly chart, let's see, what are we in? So the weekly chart tells the picture. The weekly chart says, you know what? The larger time frame trend is to the downside. You're in the red zone out here. Now, last week, inside of the consumer staples, it formed what? It formed a hammer candle. In fact, it formed a very nice hammer candle out here. So we can see that a little bit of a consolidation zone that it has been traveling in. This is a weekly chart, so it's really been consolidating since March of 2013. So from March of 2013, from the lows here of about, 39.14, that's kind of a low area of your consolidation, the top portion of the consolidation. Well, you'd have to say it's really up here by this little bearish engulfing candle, the high that was formed here the week of December 13th, and that level was out at 48.38. Now, here's the key. And this has been consolidating. So we know we could measure this box, this consolidation from high to low to figure out where that measured move would be. In fact, you do it. I'll give you the numbers. That's we'll round it. We'll see if I can do it. So $48, we'll say from 48 to about 38. So $10 consolidation is what it's traveling in. So what you can expect here, because right now this is selling pressure that's inside this equity. And if we see it close below last week's low, which is a hammer candle, 39.83, where will price travel down to? Where should it likely travel down to inside the XLP? Exactly. It'll travel 10 points lower. So instead of 39.83, you'd be looking at 29.83. 29.83, where does that take us to? Good question out here. It takes us below the swing points back in October of 2012 out here, I believe. November takes us all the way back into takes us below November 16th of 2012. Boy, that would be a trip, wouldn't it? In any event here, this hammer candle inside of the XLP is very important out there to be watching. Let's take a look at the energy sector, the XLE. That happens to be the 246th weighting structure inside of the S&P 500. So it's slipped. Used to be up like number 2 or what have you. It, too, last week has a hammer candle. Shazam out there. If we take a look at the low of that hammer candle, that is very important. That low from last week happens to be $81.78 on the weekly chart. This, too, is in a sell mode out here. So this says be careful. That says watch the low of last week because you get a close below that. You know the expression. If you are long, you are wrong out there. Again, that low from last week is $81.78. Weekly chart here is in counter trend rally mode out here. Let's go take a look at the daily, see what the daily shows us as well. Daily really expressing the same sentiment to me here right now, the energy sector. Of course, what we can do is just take a look at a couple of stocks out there. We can go look at Exxon Mobil, XOM, which represents a substantial portion of the XLE. Only 41 stocks inside there, but Exxon Mobil, I don't know, in that 14, 15-ish % range out there. ExxonMobil on a daily basis, you can see what this is in. This is sellers are in control of ExxonMobil. This thing here has not been able to participate in any kind of counter-trend rally that we have been taking a look at. So the XLE is spelling curtains. Of course, curtains will really be, and they'll be big curtains, will be a close below last week's low out there, that hammer candle. If we take a look at Chevron, CVX is the ticker symbol. I believe ExxonMobil and Chevron are the two top weighting structures inside the energy sector. And what is this showing us? This is showing us counter-trend rally. This is showing us the bears are in control. This is a daily chart. Not really much participation here inside of CVX in this counter-trend rally. It's going to find some stiff resistance at this little falling window, this little gap, which was from January 31st out there. That high 113.90 out here. This thing has been in big bearish mode. Really had that. Here's that hammer candle. So here. This is important. Let's take a look at this. Here's a daily chart, just so you can get an idea. Here's a daily chart for Chevron. CVX is the ticker symbol. Here's a hammer candle that was actually formed on January the 9th, 2014. That low, 122.02. You get a close below it. That very next trading session, your first target is going to be the swing point. If we go take a look at volume, we'll probably see that volume was coming out of this equity, but that was the time, if you were long this equity, that was a time to really tighten up your stops, get out, maybe take a look at going short out there. And that is on Chevron. Schlumberger, SLB, not XLB, SLB, Schlumberger, is also another top weighting inside of the XLE, and you can see here this really has just been in a sideways consolidation move out here, and this thing is running into a little gap down out here. And that's what's being tested here this morning. And that's from January 23rd. The bottom of that gap is 89.88. You're trading at 89.78 right now, so it looks like that is probably running into resistance. So the XLE is not very healthy. Of course, weighting-wise, again, the XLE is only 10%. It is now the sixth weighting structure inside of the S&P 500. Let's take a look at the industrial sector, the XLI. That is 11%, or very close to 11% of the weighting structure out here. Here is a daily chart. This thing, too, counter trend rally mode out here. Let's look at the weekly chart for this. Let's switch this over to a weekly time frame. This, I'm sure, is going to show us, this shows us being in the cautionary zone out here. So that's the industrial sector that we're looking at, represents 11%. This two last week, it formed really two candles out here. It formed a bullish engulfing candle, pretty easy to do since the prior week was a doji out here, but it also created a hammer candle. So the industrial sector, the XLI, you get a close below 48.38, and it is curtains out there for the industrial sector. Let's take a look at the consumer discretionary. XLY is its ticker symbol out here, and it formed last week a bullish engulfing candle. The weekly chart here is still in a buy-ish type mode out here, but it is getting very close to turning red out here. That's the XLY. Let's finish this off. We've got three others. XLV is the healthcare sector, 13% of the weighting. Now, the XLV, that looks pretty healthy. This is trying to get up and over resistance. This is the weekly chart out here. So this is important. That's why you're seeing actually the S&P doing what it is doing out here, but a nice big bearish engulfing candle. That says, sorry about that. I'm talking to my system out here. That says the high, which is 57.50. That is from the week of January 24th out there. That is your resistance area. Again, 57.50. You're at 57.03 right now. But otherwise, from a weekly standpoint, looking PDG out here. That is the healthcare sector. Let's see what the daily chart is showing us as well. Daily chart. Not giving any other message that I can see out here, other than it is up and above. Well, it's taking on the daily resistance level. That's from January 14th. That's that little bearish engulfing candle that says the high right now, 57.07 is resistance. It's trading at 57.02. It has been as high today. So far, its intra-session high has been, I lost it, 57.06 out there. That's on the healthcare. Let's take a look at the financial sector. XLF, is the ticker symbol out here. XLF having a counter trend rally on the daily basis. Let's take a look at it on the weekly. On the weekly basis out here, this has this is formed a little hammer candle. That was from last week as well. And this is in a sell zone territory. This says the low $20.50 from last week is very important out here, and that is on the XLF. Let's round this off. Take a look at the technology sector. That represents 21% of the weighting inside the S&P 500. No real sell signals here on the weekly chart. It does have resistance. That is the week of January 24th. That's the bearish engulfing candle, the high of which is 36.03. It's trading right now at 35.45. Let's take a look at the daily chart here for the technology sector out here. Today, trying to give you a little buy mode out here. Hammers abound. 877-927-6648. We get back from this break. We'll go to Maddie in Denver, Colorado. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, the Dow's up 82 points. It's trading at 15,884. The S&P is up 7, trading out at 1807. Goldilocks up $14. Silver has turned positive. It's trading out at $20.22. Let's go out to Denver, Colorado, to Maddie. Maddie, thanks for calling. Thanks for holding. How are you doing this morning?
I'm cooking pancakes.
Cooking pancakes. Hey, you know,
Yes.
As a kid, As a kid, I used to have 2 paper routes, and the morning route, which was the Detroit Free Press, after I got done delivering, this was before school, after I got done delivering, I used to go to Big Boy, and I used to get blueberry pancakes. Do you make blueberry pancakes?
Well, I've got blueberries in the freezer, but I don't make blueberry pancakes, no.
Oh,
because
boy.
they get too messy in my iron, I've got a cast iron fry pan, so I treat it very carefully.
Now, you know what I used to have with my blueberry pancakes? It's a prerequisite. It's a Steve. It tells you about my cat. You talked about cast iron. I'll tell you about my cast iron stomach out there. I also used to order onion rings with them.
Oh.
How's that for a combination?
Well, I think cooks call that savory. It's a savory.
There you go.
Very
now,
elegant.
You wanted to savor Prudential. Yes. PRU is a ticker symbol. Tell me what you're doing, how I can help you.
Well, I've had it for a while, some stock, and I don't want to sell it. And the broker suggested, selling calls and buying puts, but the selling calls would mean that it might be taken away in a surprise move. But I'm expecting it, if the market does go down, and this is already off 10 points from the high.
Yes.
I'm expecting it could go back, at least to where it has been before. In the 70s.
And for you, this is a long-term holding.
Right.
Is that you've held it for a while out here? So what
right.
I'd focus on a weekly and maybe a monthly chart out here. And what I can tell you, Maddie, is that on a weekly basis, this has given you a confirmation of a fairly significant top out here. And that's this is my price relative strength divergence indicator. And as I was making the high out here the week of December 27, 2013, you had a bearish candlestick. You had a reversal pattern that took place the following week on January 3rd. And what you want to really be paying attention to is last week this also made a hammer candle. And that says that the low inside here, which is $79.54, is very important because on a hammer candle, it's your single biggest reversal. It's a one-candle session. In this case here, it's a weekly session that we're looking at. It is very important because it tells you that intra-week, this thing was pushing down. And obviously, the bulls were able to garner enough strength last week to be able to push it up to form a hammer candle. And that's a valiant effort. It's very, because the body of the candle is small and the wick is at least 2 times the size of that. In fact, the longer the wick, the stronger that session really is. This is a pretty strong hammer candle that was formed inside of Prudential out here. And that says that and right now it's actually in a sell mode on a weekly basis. Doesn't mean you need to take action, but you do need to be careful out here. And if you get a close below last week's low, where will this thing find support? Well, it's got a swing point back here at August 30th, and that's what you would be looking for. But I would suspect it would go lower than that. That's 74.10 out here. If I put a monthly chart on my screen for you, let me do that here real quickly. We've got about another 15 seconds or so. The monthly chart looks okay, but you don't really want to see this close below $76 or so out there. So,
right. So I was looking to buy puts. That was buy puts. And I was looking at the 75s or so.
I think this might have this on a monthly chart. It should have pretty good support at 76.88. But that hammer candle, the low of last week, is really going to be key for you in your trading decisions.
Okay.
Maddie, I wish I had more time. Thanks so much for calling. Folks, stay tuned. Our man Basil Chapman is up next. Have a great Tuesday. I look forward to seeing you tomorrow morning. Be safe out there. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.